Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's finally go over Tesla, go over the market and figure out what is happening so far. Like I said before, I was not uploading any videos last week. I was away on vacation / wedding. Some friends were getting married, but we're back, we're ready to go. So as usual, if you enjoyed the video, don't forget to hit that like button as it does help a lot. Moving into it though, by the way, this is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live with a link down below, $2.99 a month, where I essentially update my members throughout the day as Tesla is moving. But jumping right into it, the market closing in just a couple minutes here. Tesla closing just barely in the green, which, it was kind of all over the place a little bit, kind of a slow day, but still sort of all over the place slowly. But it looks like it'll be closing just barely in the green at pretty much $239 per share, which unfortunately compared to the market is definitely a bit of an underperformance. Now, let's figure out what this all means and what we can expect moving forward. Ladies and gentlemen, this is the final week of August and September. As we know, as I said many times, as you can see here, is usually not a good month for Tesla nor the market. But of course, nothing is guaranteed. And this could be that outlier month of the year where that 33% kicks in and we actually get a positive September. Who knows? It's obviously unlikely, but it's absolutely not zero. Now, first thing I want to talk about is going to be on the daily. Let's start simple. Let's start talking about the absolute basics, which is going to be essentially the most three important lines I would say that you can be looking at as of right now. And I believe the next one is going to be right here. So these right here are the three most important lines I would say you're probably looking at, right? The bottom one is the 100-day moving average. The top one is the 50-day moving average. And the one right in the middle is, of course, going to be the 21 EMA, right? So as I said before, we did kind of just barely close below, the 50-day moving, or the 100-day moving average, right? Remember we talked about 210. I've talked about 210 for such a long time. It was my second major price target that I've been talking about ever since we were all the way even up here, right? 220s was my first, 210 was my second, right? And then we did bounce off of 210, right? This was the most important level to bounce off of because it was the bottom of this overall channel, as you can see, right, that we kind of been zigzagging throughout within, right, which again could potentially be a bear flag on the weekly. We'll talk about that later. And on top of that, let me go ahead and actually remove this right here. And on top of that, right, this was of course I believe the 0.5 level of Fibonacci. And on top of everything else, right, this little situation that we had play out was not only maintaining the 100-day moving average, right? We can have one day close like this is fine. It's kind of like a bit of an anomaly, right? As long as if you close below major like moving indicators like this, but then you kind of get back above them within, for me at least, within 3 days, to me, that's fine, right? Not only did we do that, right? We did close below it and then we had, one day actually fully below it and then we gapped right back up above it. But this also created what's known as the island formation pattern, right? Which is essentially in this case, a bullish pattern, a bullish formation, which we got a beautiful rally off of. Now, the thing I've been telling my members all of last week is essentially Tesla, in theory, could potentially retrace down to as low as the kind of low 220s-ish, but you really, number one, don't want to lose like about 220, 221-ish level because that's where the 100-day moving average is, but you especially don't want to gap fill this because if, in theory, Tesla comes back down to gap fill this formation I just talked about, right, the island formation, where essentially you have a gap down, you have a bit of trading down here. In this case, we only had one day of trading, right? But nonetheless, you have a bit of trading down here, right? And then you have another gap up and you can kind of see it's kind of left by itself, right? That's why it's called like an island, right? It's kind of just left alone back there. We had a similar pattern on the indices as well. It was a bearish one, but this is a bullish one. But you don't want to gap fill this because if Tesla retraces back down into this level, or into this territory to around 215, 216 and gap fills it, it pretty much eliminates that pattern entirely. And that wouldn't be, it's not necessarily bearish, but it removes any potential bullishness that it, maybe even served or could have served. So that's not ideal. So yeah, essentially you don't want to gap fill that anytime soon. Now, we are closing essentially just below the 21 EMA, of course, above the 100, below the 50-day moving average. But another very important factor to consider here is the fact that we are pretty much closing at 239, but it's not a super convincing close, right? And the reason I'm bringing that up is because to me, the 240 to 242 level is really, really important. So we did close below that, which is unfortunate, very slightly below it, but nonetheless still below it. But on the flip side, we did on the bright side, we'll talk about it on the daily. It's actually easier, right? We did actually close slightly above the levels that we did get resisted at before, right? We came back up to these levels over here. You can see somewhere around pretty much 238, as high as about 241, right? Every time we came up to these levels, we constantly got rejected and we couldn't really get any solid, meaningful closures, right? As you can see, if you kind of zoom in like right here, this is like a pretty decent example, right? You can see these three candles right here constantly got rejected at the exact same level. And in this case, we kind of came back to that territory, leaked well into it, which was very scary here. But we thankfully thankfully got recouped it back up, and we did close pretty much right at the resistance, now potentially turns support, that these levels couldn't at before, and now we are essentially closing. So we are essentially turning what used to be a resistance into support, but it's not super convincing because we're pretty much closing right at it, right? And unfortunately, just a tad below 240. So a little bit on thin ice here, in my opinion. We definitely need to see some good follow through tomorrow, in my opinion, and get back above 240. That would be very ideal, and that would be what I personally am looking for. Now, continuing on in the daily section, right? So let's go ahead and remove these indicators. We don't care about them anymore. We just talked about them, right? And 100-day moving averages right here, right? So another thing to talk about on the daily is, of course, the MACD at the very, very bottom. You can see right here, it is crossing bullish, right? You can see we're starting to get some green bars. That's a sign of number one. And number two, you can see, right, ever since we crossed the bearish over here, which was way back over here, right? We still obviously had a bit of a rally, but you can see we constantly came back up with the green line to the red line, and they constantly kept getting rejected. It happened right here, and then it happened right here, all right? And then we, of course, had that massive fall ever since earnings. However, now you can see it's finally crossing. It's no longer getting rejected. We're getting green bars, and its MACD is finally crossing bullish, which is a good start. Obviously, we need a little bit more follow through, a little bit more confidence in it, but it's a damn good start, right? That is definitely not bad. However, on the contrary, quite the opposite is actually happening on the weekly, right? We've been pretty bullish on the weekly. The green line above the red line, coming to it, retesting it, bouncing off of it. And now, unfortunately, the weekly, the green line has crossed below the red line. So pretty much a complete opposite of what has happened on the daily. So take that as you will. There's a bit of conflicting, results here, but essentially what I would take from it is the fact that on the daily, it tells me that, there's actually potential for a bit of a rally here, right? Maybe the next month or two, which sounds contradictory considering, September and October are Tesla's literally worst months. But the weekly is telling us a picture of the fact that, the trajectory to the upside is not super convincing yet. In fact, there's actually a chance that we do break downwards from this overall ascending channel, which we talked about many times being a potential bear flag. And then I think this will take us probably to around the mid 100s at least, if not potentially even back down to the extreme low 100s. So there's a little bit of conflicting mixed results here that's going to be difficult to navigate through, because if we go to the monthly chart, this is a much more simplistic view, still bearish technically, right? But you can see it's definitely starting to flip a little bit towards the bullish side. Not yet, but it's getting there. And you can see the green line is getting close to crossing the red line. On top of that, on the monthly, we also have this one blue line that I drew, very simple look, but you can see ever since these levels over here, Tesla has rallied, made this massive move to the upside, right? Constantly using this line as a support over here, came back down, used it as a support, got a beautiful bounce, and then we finally crashed below it. This is when Elon was selling, came back up to that general level, got rejected, came down again. And then this candle right here on the monthly brought us back above. We came back down to retest it, right? As I always say, very common to retest a certain breakout or breakdown. In this case, obviously a breakout into a retest of it. And so far, so good. We're so far holding with only a few days left for this monthly candle. So if we can close pretty much above like 236 roughly, this would be good, because this monthly candle will in fact close above this blue line, which in theory should be a good sign, but obviously nothing is guaranteed, right? We can all just take this as a percentage-based system. So that's another thing that I would personally be looking at. Let me just double check what else I brought up to my members to make sure I am not talking about, or not rather forgetting, right? We got the bearish opinion, the volume by price, right? That's something else important to discuss. The volume by price is important to discuss because, well, as I've talked about it many times, if we snap 240, the volume got a lot thinner. And then, of course, we are going to be going down much, much more aggressive. And that's exactly what happened. And in this case, we're pretty much going back up pretty fast through that same low volume area, low turbulence area, if you will. Unfortunately, the volume that was acting as a support back in the low 240s is now going to be naturally acting as a resistance. And that's exactly what we saw today, which is why it's going to be a pretty tough battle to the upside. Not impossible, but definitely tough, because now this higher volume is going to turn in from before potential buying pressure or people, acting as a support, to now acting as a resistance, people potentially selling into this higher volume area. And as we get higher and higher and higher, and as we continue trying to make this rally happen, the volume only gets higher, especially in the mid 250s roughly. So it's going to be a bit of a trek to the top side. it's hard to tell if this is going to be the bottom yet, and I'll tell you what I'm personally looking for to determine that. But keep that in mind. There is a lot of resistance above us, and there's a lot of cloudy area above us, especially with the volume by price. So just take that for what it's worth, ladies and gentlemen. And the final thing I want to talk about is this, right? This is pretty important in my opinion, and this is kind of roughly how I determine if this is going to be this kind of 210 area is potentially the bottom, or if unfortunately we got more pain ahead of us, potentially in September, October, etc. Is going to be this Fibonacci situation here. So if we take it from the swing high to the swing low right here, which is now confirmed the swing low for sure, right? Now, we have three levels that I look at, right? Very important levels. The 0.382 level, the 0.5, and the 0.618, which is essentially 245, 255, and 260 to 270 roughly, right? Those are the important three levels I've been looking at. And so far we did get exceptionally close to the 382, right? Which is the 245 roughly on the Fibonacci. And we got rejected, right? So if in theory we get rejected from here, and let's say in theory we never move past about this kind of 245, 244, that general level of this 0.382 level on the Fibonacci, and let's say we don't get past it, we just can't find a way through it, and we just get smacked back down. That's pretty bearish, because this tells me that this bounce is not only obviously quite weak, but the bulls are just really not showing any signs of life, if that makes sense. That's very bad. The ideal scenario, at least to get some decent, respectable bounce, potentially a dead cat bounce, is to the 0.5 level. That's kind of like an expected level. If we get rejected there, then I think we'll come back down probably to retest the channel one more time at the bottom before maybe making our way back up finally, right? But it's not super convincing for the bulls yet. Now, what would confirm this to be potentially the bottom, and then we can potentially actually get back into the 300s, is if we break above the 618 level, which is pretty much that 266 to 270 level. That level is extremely important, and that's the level I want to see break in order to confirm that this potentially is the bottom, because that is going to be the last level, in my opinion, for the bears to defend. That's usually kind of how the Fibonacci's work, from my point of view, at least from my experience, right? And it also makes sense because this level that I just talked about, 266 to 270, is the level that gave us massive rejection ever since that massive fall from earnings, and that also followed through with another substantial fall and sell-off post that as well. So very crucial level to break, not only just because it's a very powerful resistance support level, especially in the past that led to a massive sell-off, but it's also that 0.618 level that's also important, in my opinion, to break for the bulls and for the bears to defend, in order to see if this right here is going to be the bottom, or if we at the very least come down to retest this rough area once again, or worst case scenario, if we can't get past this kind of 244-ish area, I think we're probably playing out this overall bear flag I talked about and probably making our way back down to the mid 100s, which wouldn't be ideal, but obviously a possibility. So those are the main things I am personally looking at. Otherwise, there's really not much more to talk about, right? The option flow, I did look at it earlier. I didn't really update too much on it to my members because there really wasn't too much to update when I looked at it earlier. But let's take another look. Maybe it's changed since then. You can see nothing too crazy. I mean, definitely some bullishness flowing in. These green bubbles right here weren't there earlier in the morning when I was watching. There are still some short-term bearishness, but a little bit more bullishness finally coming for Tesla than bearishness, which is a good sign, but nothing substantially in one direction, in my opinion. Just slightly more bullish. So I wouldn't put too much weight into that just yet until we see something a bit more meaningful, in my opinion. But all that being said, that's it for the video. Ladies and gentlemen, let me know what you think down below. If you enjoyed the video, of course, don't forget to hit that like button. But tomorrow, I think, will be an important day, and we really want to start recapturing the 240s and breaking past the 318. I'm like blanking on the Fibonacci levels now. I mean, that is not a Fibonacci. What am I doing? What was that level called again? The 382 level, that's the level. We really want to break above it. Very important for the bulls to break above that so that this bounce has some merit to it and some kind of meat to it. Very crucial in my opinion. But thanks so much for watching. And as usual, I'll see you for the next one. Peace.